Hey, Cody, thanks so much for joining us today. I've been so looking forward to this webinar. So many of you have been asking me about interest rates and what the real estate market is looking like, if buyers can even get loans right now. And I thought, you know what, let's go straight to the expert. So Cody Daniel's on this webinar today. He is with Capstar Lending, and I'm going to just ask him some of the most important questions and questions I've been getting repeatedly from all of you guys. So first of all, Cody, I know that interest rates are at historically low numbers right now, but exactly what are the current rates if someone's looking to buy a home or to refinance?
Yeah, purchase rates are at the all-time low. And a lot of times we say they're near the all-time low, but we're actually at the all-time low. So yesterday, we locked in somebody at 3.0% on a 30-year fixed, which is just insane. That's maybe not every scenario, but that was perfect credit, perfect scenario, perfect timing. But I would say anywhere from right now, they're anywhere from 3.0 to 3.25%, which is just incredible. Refinance rates have normalized too. Typically, maybe 3 or 4 weeks ago, refinance rates were about 3/8 higher than purchase rates. But right now, they're tracking about 1/8 higher. So we're seeing refinance rates in the 3.125 to 3.375 range. So we're advising all of our clients who are at 3.875% or higher to at least look into refinancing. And the key with refinancing is really how long are you going to be in the house. So if you're going to be in the house for longer than 2 or 3 years, it makes sense to look at it. If you're going to sell in the next 1 or 2 years, you should contact Luisa and not refinance.
Thanks, Cody. Yeah, anyone that hasn't refinanced, Cody's made it really clear on if you should explore it or not explore it. And it's easy. You can start these applications online. Cody's team makes it super easy. So it's something that's really worth looking into if you've been postponing it. So great.
I would say another comment on that, sorry to interrupt, would just be if your loan balance is over, maybe 175 or 200,000, it makes more sense. So we've got some inquiries where people owe 50,000 or 55,000 or 80,000. And the issue with that is that the fees are kind of fixed, whether you borrow 400,000 or 80,000. And really the break-even point, even if you drop 1% interest rate, but you only owe 50,000, it doesn't make sense. You're better off putting the $3,000 or $4,000 in fees just towards your mortgage. So that's just one little thing I wanted to put in there.
That is great information. Thank you so much, Cody. Another question I had was, are there any tricks right now? I know you've shared whether someone should explore refinancing or not explore, but are there any tricks that they could use to get an even better refinance rate?
Yeah, with some of our past clients, right now the Fed has agreed to buy unlimited amounts of mortgage-backed securities, which is a lot. And unlimited is probably the first time I've ever seen that. They used this strategy in 2009 to keep rates low, and they're doing it right now. So one trick on how to use that is we're actually having people get all their documents in, get the loan fully clear to close, and then we're doing a 15-day lock, which is about 1/8 to 1/4% lower than a 45 or 60-day lock. So that's kind of a trick to get an even lower rate. But some clients don't like the risk of floating. So for those clients, we're going ahead and locking them in. But for the ones that are a little bit more risk loving, we're going ahead and getting them all their stuff in, getting approved. It takes about 2.5 to 3.5 weeks. And then we're hitting the lock button on a 15-day lock to optimize the lowest rate possible. So there's 2 strategies we're using right now, and both are working great.
Yeah, it's fantastic. Thank you. Have there been any underwriting guidelines that have changed for people that are looking to get loans, whether they're employed or self-employed? Has anything changed that people should be aware of?
Yes. So for employees, it hasn't changed that much. So anytime you have times like this where there's uncertainty, it goes to a little bit more makes sense underwriting. So if you have a $60,000 salary and you made $100,000 in commissions doing travel sales, obviously we're going to have a hard time using that commission income. But if you're in internet security or wine sales, those things are doing really well. So those bonuses and commissions are very easy to give. So we're kind of taking them case by case, but it's just kind of makes sense underwriting. But for the most part, if you have a salary, we're trying to pre-approve everybody based on just their salary alone, because that's a conservative way of doing it. If we need bonus, we just need to make sure that it makes sense. We want to see that the bonus income is not declining over the past, 4 to 8 weeks, and that's for employees. Now, if you're self-employed, there's another layer of risk. So we have to look at what does the revenue look like in the past 4 to 6 weeks? Is it moderate? Is it based on your qualifying income that they're using? Are you still seeing that kind of revenue come in? Or if it's declining, so I had someone that applied in wedding sales. Obviously, the wedding revenue sales over the past 4 to 6 weeks has been zero. So it's gone down dramatically. So we can't use that income. So that person's going to have to wait until things normalize, and then they can show a 4 to 6 week period where revenues are bouncing back up. They're still optimistic because you're going to have pent up demand. People are still going to get married. So their back half of the year is going to be probably their best back half that they've had, but we're going to have to wait and see that rebound before we can actually get them a loan.
That makes sense. So crystal ball question, where do you see interest rates going and why?
So most experts think rates are going to stay low until the election. So the election is kind of the key moment right now. Right now, the administration is doing everything in their power to keep a lid on rates. A lot of people feel that that Trump is doing that. If he is reelected, he might move on to other things as far as his priority. But right now, keeping rates low and keeping the economy moving is his number one priority. So if I was looking to buy or refinance, I would be looking to do it between now and November. Rates could stay low after November, but it's more of a wild card. So if you're really interested in getting the lowest rate possible, it doesn't get lower than it is right now. I think we're pretty much at the floor. So I would be looking to refinance or buy right now if getting the lowest interest rate was my goal.
Excellent. And you all may know this, but in case not, every point interest rates go up, buyers can typically afford about 10% less homes. So they're really impactful, and these rates are just tremendous. Another question, Cody, I've had quite a few clients reach out to me and say, I want to buy a home, but I wanted to get a jumbo mortgage and I can no longer get that, right? And, well, I know it's not correct. So can you help shed the light and the truth on that? Are jumbo mortgages available? And if so, what does that process look like for buyers?
Yes, great question. It's probably the most common one that I get right now. So a lot of banks stopped doing jumbo loans. That is true. The reason why is because they're not backed by the federal government. A conventional loan, which is any loan at $500,000, $10,000, $400,000 and under, is backed by Fannie Mae, which is backed by the government. So those loans are business as usual. The jumbo market is backed by the banks, and they take their own risk. And so some banks at these levels got out of the market. The good news is that we partnered with one of the best local banks here in town, and we have an incredible jumbo 30-year fix that starts at 3.25% with 30% down, or 3.375 with 20% down. And to make it even better, they allow us to do a 10% second lien behind it. So we can do a jumbo purchase price with as little as 10% down, which is just incredible. And there's no PMI. So that in this market is truly incredible. So the jumbo market, especially for our company, we're one of the only 5 companies that are booked with this certain bank here locally. So we're doing a lot of jumbo loans right now. And you can't beat those terms.
And those jumbo mortgages, are buyers still able to close in about 30 days getting the jumbo mortgages?
Yeah, we're recommending 30 to 35 days to close. So we don't need 45 or 60. But I wouldn't recommend a 3-week close either. So I would be doing 30 to 35 day closes on jumbos. Excellent.
Super. Is there anything else you feel we should know about financing, interest rates, anything that could be helpful?
Just that find a really good local lender. I would love to be the choice. I've been doing this for 18 years. I've been through a couple of rough patches, and I know how to navigate it. And not every loan officer does. So if you're a loan officer right now and you're not saying no some of the time, you're not doing your job right, because you've got to really dig into these files and make sure that when you give a pre-approval that you can honor it. And that, I always say when I start a loan, I finish a loan, no matter what. So I think you just got to be really diligent, but also don't be scared. Like so many people think they can't get approved, and they've got an $8,000 salary and their wife's got a $11,000 salary. It's nothing has changed. So, the down payments changed a little bit. We still have 3% down. A lot of banks don't have that. We try to recommend 5% down. and we try to recommend having a few months reserves. Again, that just makes sense. But we still have a lot of great options that we can help a lot of different types of borrowers.
That's super. And thanks for bringing that up about working with a local lender. It is so important. I mean, I have an example this morning. We have a client who's purchasing a high-end home. And unfortunately didn't choose to go with my recommendation. And so the lender is now looking at another 60 days to close for their jumbo mortgage. And that's not typical in our Austin market. So we're really struggling with the seller right now to keep this buyer under contract and moving forward, because still people are expecting this 30 to 35 days, and a phenomenal local lender is the key right now to making it to close. So thanks for bringing that up. Cody, what's your contact information in case anyone would like to reach out to you directly?
Yeah, you can reach me at my email, which is cody@danielmortgagegroup.com. So again, that's cody@danielmortgagegroup.com. Or you can reach me via phone at 512-750-2999. Again, 512-750-2999.
Fantastic. Thank you, Cody. And thank you all for joining us today. Please let us know any other questions we can answer, and hope you have a fantastic rest of the afternoon.